President Trump flirting with the idea of breaking up the banks. Here's what I had to say on the matter just a couple of weeks ago.
You've got to have an understanding of what a bank does. You know, the bank is saying, I want to make money, and I'm going to go make money wherever the opportunity exists. The fact that they're supporting, liquidity in the financial markets, the fact that they're supporting,
I don't have a problem
getting
with that,
money
Dick. I just wish that they were.
Well, you just complained about it, Charles.
I have a problem with those being under the same roof. And I think that it does lead. I think it does lead to a lack of opportunity for Main Street America to evolve. While the stock market's near all-time highs, while banks are paying out billion-dollar bonuses, I just think that the little guy watching this show that wants a house or to start a business is getting the shaft. But we're running out of time, and I have to ask you.
He's not getting the shaft from the bank. He's getting a shaft from the government. He's getting a shaft because people like you don't understand what a bank does. There's no reason for a bank to withhold funding for the little guy on Main Street, and they're not doing it. They're the ones who are providing the bulk of the funding for the little guy on Main Street.
All right.
They do not want to hold this funding.
I'll study banking more and watch It's a Wonderful Life less, and this way I'll understand banking. All right, well, back for round two. Bank analyst Dick Bove. Dick, I didn't get a chance to read any books, but I read quite a few income statements because it's earnings season, and it just bolstered my opinion that these large banks, these large money center banks, the J.P. Morgans and the Citigroups of the world, get to make money by trading, by doing institutional banking and a lot of things, and they could defer or put off the notion of investing in America, making loans to middle America, whereas I'm seeing the regional banks step up to a degree. So why not break up the big banks?
Well, one reason is because you're going to increase the price of all financial products to American consumers. Two is because you're going to reduce the number of banking products that they will be able to access. Three is because you will so weaken the position of the United States in the global financial markets that you'll start to threaten the dollar as a reserve currency. Right? Basically, it is the big banks who fund the small businesses. It is not the small banks who do it. How do the big banks do it? They do it with credit cards. If I want to borrow money as a small business, I don't go to a bank and sit down and talk to a loan officer and ask what the terms would be, etc. I pull out my credit card and I get the loan. And I do that because not only do I get the loan, but I get points. And the small bank is not going to give me any points. So if you want to break up the banks and reduce, the economies of scale in the business, you're going to increase the cost of funding to the small business. All right, the second point is they're not going to get their mobile banking. Most customers now, or certainly the millennials, they want mobile banking. They want digitized services. The small banks do not have the, if you will, capital to provide those products to the marketplace. All right, point number three is, if you take a look at who the biggest banks in the world are, they're definitely not in the United States.
Right, okay.
The smallest.
I remember when Japan had 5 of the top 7 big banks and their economy collapsed. I mean, having big banks just for the sake of having big banks is nothing. I think it gives you a false bravado, a false sense of security. We had the biggest banks in the world going into 2009. Now, having said that, in 2009, bank loans were much higher than bank deposits. That changed, and it's only gotten worse since then. I hear what you're saying, but you describe the banking industry as if it's the airlines, and there are only 5 of them. There are literally thousands, and I think they all could step up to the plate if they had elbow room and they weren't dominated. And by the way, legislation wasn't focused on these big banks. The reason why they can't step up to the plate is because they don't have customers, right? In other words, if the small banks were offering such tremendous services to the marketplace, they would have customers. And if they had a lot of customers, they wouldn't go out of business. But yet, from almost every day, from 1987 to the present, you have lost something like 14,000 banks in the United States because they don't have customers. And the biggest banks in 2007 and 8 were not the American banks. And the loans in the American banking system are not greater than the deposits in the American banking system. Let me ask you, did America have an amazing economic run from the time Glass-Steagall was put in until the time it was pulled out in 1999. I mean, listen, I was in your shoes. I believed wholeheartedly like you are and believe just a couple of years ago. But as I watch it closer, as I look at the numbers for myself, I just don't believe that Citibank or J.P. Morgan cares about Main Street America. And I think those small banks, if they're given a chance, could actually provide the loans that these guys are loath to provide.
Yeah, but J.P. Morgan's biggest source of profit is consumer banking.
It's trading.
Those small loans.
The stock is going to go up and down on earnings. If they made trading, it's the commodities, it's the investment banking.
But the trading is not their biggest source of profit. Their biggest source of profit are credit cards, mortgages, small business loans, middle market loans. That's where J.P. Morgan's profits come from.
And by the way, we're not saying put them out of business. All we're saying is take these gargantuan banks, and split them in half or split them in a third, whatever it takes. Dick, I want to bring in our panel to help join in the discussion with this, if you don't mind.
Okay.
We've got Brian Brenberg. He's an economist extraordinaire, and Chris Bedford, an observer of all things financial. So let me start with the professor. Professor, what are your thoughts on this?
Well, look, I don't care so much about breaking up big banks or not breaking up big banks, but I'm with you in terms of I care about taxpayers providing subsidies to big banks, giving them ultra-cheap financing. I don't like that. And so I think in terms of solving that problem, I'm not a big fan of Glass-Steagall. You may be a fan of Glass-Steagall. I'm not a fan of that. But I'm a fan of maybe higher capital requirements.
Donald Trump is calling it a 21st century Glass-Steagall. So it wouldn't necessarily be the FDR's Glass-Steagall, but something akin or more appropriate for the times.
You know who else is talking about that, though, is Elizabeth Warren as well. And I get a little nervous about those guys getting their hands in the pie because that means more regulation, and Donald Trump ran on less regulation. How about a simple requirement that requires banks to have more capital, takes taxpayers off the hook, but doesn't get us into the regulatory morass?
But they have that now, and they use that as an excuse not to make loans. They say, okay, you know what, we'll make it up, Chris, with trading. And so they're saying, well, they told us to hold the money and not lend it. And you look at the Fed survey of lending managers, and they've got all of these excuses, for not lending money, Chris.
Yeah, and that's why you're going to see this populist uprising from both the left with Elizabeth Warren and from the populist right with Steve Bannon, with Donald Trump. And people are definitely ticked off. They didn't see anybody really punished for the Wall Street crisis. I'm not exactly sure what they're looking for, if they're looking for a public flogging or something, but they didn't get that sense of satisfaction. The problem here for guys like you who are for Glass-Steagall is Donald Trump has so much on his plate right now. The Republican Party, tax reform, they couldn't even get through the first round of health care reform. The chances that he's going to be able to go through now and then say, all right, let's do financial reform, I think it's fairly low.
It may be a pipe dream. I spoke in front of the Credit Union Association last week. Maybe people could do more business with them. But Dick, I'll give you a quick last word if you don't mind. If the president does put through some form of Glass-Steagall, would that really destroy our economy?
It wouldn't destroy our economy, but it would certainly make it more expensive for people to borrow money. It would make it more difficult for them to get the products that they want. The biggest banks in North America would all be Canadian banks because 5 of the top 9 banks in this continent are Canadian banks. The biggest banks in the world would continue to be the banks in the Far East, the banks in France, and the United States banks would shrink.